Here we go. So the S&P 500 breaks the 5,000 level, and it's the fifth consecutive winning week for the major indices. But this week, the consumer price index will be released. So how will markets react, and how does this affect our positions? Welcome to Coffee with Markus and Mark. Today is Monday, February 12th, and in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And as you can see, today, it is Markus only. Mark is out today. He will be back tomorrow. And of course, we will talk about the markets. But first of all, I have two questions for you. First, did Taylor Swift make it to the Super Bowl? I don't know. Leave a comment. And secondly, what was your favorite Super Bowl commercial? Well, I can tell you mine. Mine was the one with Arnold Schwarzenegger, like a good neighbor. As you can imagine, I can relate. So there we go. Us foreigners, we have to stick together. Anyhow, with that said, leave your comment with your favorite Super Bowl commercial below, and let's take a look at the market. So last week, the S&P 500 cracked the 5,000 mark decisively. Let's actually jump over to a 5-minute chart and see what happens here. So as you can see on Wednesday and Thursday, this is Wednesday, this is Thursday, prices were touching the 5,000, poking through a little bit, touching it, poking through a little bit, but closed below the 5,000 mark. And then on Friday, we opened above the 5,000 mark, and there was no 5,000 mark, and there was no more stopping the S&P. As you can see, it was up and away, closing at 5,026. There we go. So up and away, making new record highs. And it's kind of crazy because if you look at this, right now, today, the S&P is moving even higher. Right now, the S&P is already up 6% for the year. The NASDAQ is up 7.8% for the year. And even the Dow is up 3% for the year. Now, as you can imagine, with the NASDAQ being up 8% for the year, almost it's 7.85%. I mean, this is not sustainable. I mean, we cannot make 7.85% every, 6 weeks? Because if you think about it, if we would continue to do this, we would probably end up somewhere between 60 and 70% by the end of the year. So at some point, these indices have to retrace, but right now it is up and away. Look at this, the 50-day moving average decisively above this. So I would expect at some point that we might pull back towards 4,900. So probably not all the way to the 50-day moving average, but pulling back towards 4,900, this might be healthy. And if you look at this, there's also some sort of a trend line. So that's what I expect over the next couple of weeks. But for now, it is what it is. So what's happening this week? What could pull the S&P down? Hopping over here to the earnings calendar. So we still have a pretty busy earnings week. So we have 61 stocks reporting earnings out of the S&P. And we have Coca-Cola, Kraft, Heinz ketchup. We have Deere, so these are the good old solid stocks. We have Occidental Petroleum, but then we also have DoorDash. Where's DoorDash? Right here. We have Uber reporting. We have Airbnb reporting, but nothing really today. It really starts happening tomorrow. But the big news will be on the economic calendar. Oh my gosh, I just see it. It looks so empty without Mark, doesn't it? I mean, I hope that you're enjoying it. I enjoy doing this every now and then by myself, but I really miss Mark. Let me know what you think about it. If you like the show here with just me, give me a like. Really appreciate it. But let's take a look at the economic calendar. So we do have tomorrow the CPI, the Consumer Price Index, and that's definitely something that can move the markets. Being released 1 hour before we start trading, and the CPI year over year is expected to drop from 3.4% to 2.9%. So the CPI is supposed to drop from 0.3% to 0.3 to the core CPI, which is excluding food and energy, is expected to be at 0.3%. Then on Wednesday, this is followed by retail sales. So this is where we want to know what's happening here on retail sales. So let me just move a little bit higher because we have some more events coming up here. So retail sales expected to drop, but we'll see, right? I mean, the economy has been really strong, giving the Fed a reason to pause and not lower interest rates just yet. And then we have on Friday the core PPI and the PPI, the producer price index, expected to come in at 0.1%. So these are the reports that traders will focus on today, because the question is still, what will the Fed do? We have the next Fed meeting in 37 days, 2 hours, 54 minutes. And right now, let's see what traders are expecting. I actually would like to go to the probabilities. Let me just hop there for a moment. And bring up my drawing tool here that we can take a look at the probabilities. As you can see, there is still a small chance that the Fed might lower interest rates in March. And this is factored in because there's still a lot that can happen in the next 37 days. We might get some reports seeing that the Fed might actually have broken something. And if so, they need to do an emergency cut. Both Mark and I believe that we will be probably closer to June or July when we start lowering interest rates. And that's exactly what we see here. So around June and July, that's when the probabilities of the Fed lowering interest rates are getting close to 100%. So right now, still, it seems that maybe some traders, Fed funds traders, are betting on lowering it in May. But Mark and I believe that it will be June or July until they do it. All right, so let's see. What else is going on here today? Not a whole lot. As said, today is a rather quiet day. And if you look at a 5-minute chart of the S&P, we see that it has been diddling along, just pushed higher in the last 30 minutes here, but on no news at all. There were no major earnings reports. There were no major news. It is just right now the FOMO, the fear of missing out, money coming back into the market since we are trading at all-time highs. So how do we trade this and what's happening here? Let's start with the WTF analyzer. And this is the win the fear trades. And we currently have 2 trades open. One of them is being Team Atlassian Corporation. And if we zoom in a little bit here so that we see it on a 3-month chart, we see that we bought it for 214.11. Right now it is trading at 220.28. So nicely up here, doing exactly what we expected to do. The WTF strategy stands for win the fear. And that's what we are doing whenever we see that the stock is dropping. We believe that there's an oversold situation, and we try to capitalize on a quick bounce back. Nothing for us to do just yet. Looking at the second trade that we entered, and this was on Friday. Verizon, we entered the trade at $39.90. Right now it is trading 10 cents below the opening price. So if you want to jump into the trade with us, you can do it. You can actually get in 10 cents cheaper. And again, we're expecting the stock to move higher here. No new signals today. We already closed last week our MET trade for a profit. So let's just take a look at this. So MET worked out really great. Oh my gosh, look at this, jumping higher today. But here, if you look at the trading report, we see that this one, we entered at, there it is, at 65.60, and we exited at 66.80. Well, should have held it, because today, as you can see, at 68.76, woulda, coulda, shoulda. That's not how it works. We have our rules. We follow our plan. And I hope that you appreciate this, and I hope that you have a plan that you follow. Moving on to the wheel trade. So first up here, last week I was in CZR, Caesars Entertainment. I sold I can't remember exactly what I sold. However, I closed out this trade to replace it with PM, Philip Morris. So here I sold the put. I was able to take 90% of max profits, and then I jumped into Philip Morris. And here's why. Philip Morris had a really, really strong reaction to earnings. As you can see, earnings report massively down. So I saw an opportunity to sell the 88 put, which I did, collected some nice premium for this. It expired worthless on Friday. I kept all of the premium. So that trade is gone. So let's see what else is happening. We have still open CSIQ. CSIQ today having a great day, up 3% for the day. And this is what we are looking for. We're now looking to push towards the 27 level here, 28 level. As you can see, my cost basis after flying a rescue mission is now at 27.66. My break even at 27.12. So I want to see if we can sell some calls. Not anytime soon, we have to wait. But once we get up to the 26 level here where we were earlier, then we do have a really good chance. Now let's talk about a few others first. NEE today also up 0.6%. Nothing to do there. Cost basis at 69.50, break even at 67.58. And then we have UPS having a good day here as well. UPS today up 0.7%. Pretty much in line with the overall market. We are still hoping for a V-shaped recovery. Right now, it looks like the V-shaped recovery is a little bit stopped here. Not dead in the tracks, but we are right now finding some resistance at 148. I have shares at a cost basis of 157.50, but since I've sold a lot of calls and puts, my my break even is at 139.68. So right now we are trading nicely above my break even. Let's talk about MRO. MRO, as you know, I have been assigned at 22.50. And on Friday, we closed below 22.50. So last week, I already sold calls at 22.50. Since on Friday, we closed below. Those expired worthless. I kept the whole premium. And this morning, here is what I did. Let's go over to the calculator so that you can follow along as I'm doing this. So this morning, I have 8,800 shares of MRO, and I decided to split it. I decided to sell calls at 22.50 and at 23.50. And as you can see, I split it in half. So I sold 44 calls at 22.50 and I sold 44 calls at 23.50. Here I received 45 cents in premium. That gives me $1,980. So that was really, really nice. Nice, almost $2,000. Here I got $572. But here's the cool thing. If we move higher and trade, let me just collapse the puts for a moment. If we move higher and trade above 23.50, I also make an additional $4,400 on the stock. So this gives me a potential of making, in addition to the 572 plus 4,400, $4,972 on this trade, in addition to the $1,980. So that's around $7,000 if MRO starts to move above 23.50 by Friday afternoon and closes above it. If not, I will just keep the premium and I'm collecting $2,500 and I can do it again. Anyhow, I like the idea of actually splitting this, and that's what I did this morning. Then also, Mark last week sold GDXJ. And since for me, PM expired worthless, I decided to do the same thing. So I sold on GDXJ the 33 strike price expiring this Friday. I received 51 cents in premium. So this gives me also a nice chunk. So as you can see, overall today was a really, really great day for collecting premium. Let's take a look at the chart here for GDXJ and what I did here. Right now we are trading slightly below the 33. I don't mind getting assigned in GDXJ. As you can see, as we move out here a little bit, it has been trading nicely above the current levels, actually before the pandemic. Then during the pandemic moved higher, crashed lower, and right now we have some super solid support here at around 32.50, 33. I don't mind owning GDXJ, which is an ETF of the gold miners at 33. So this is why I entered the trade this morning. So this is what's going on here in the markets. And again, today a really, really good day. As you can see, today was a great day, collect premium. Right now, not yet able to sell calls against UPS. As you know, what I'm looking for, that I want to see at least 30% annualized. right now, in order to do it at my cost basis, I can only get around 2% annualized. If I would go lower and look at my for UPS, as you know, my break even is at 139. I could actually sell a little bit more aggressively, and I could sell maybe the 147, collect a lot of premium there. But I don't like doing this below my cost basis. So this is why I decided to wait here, especially after collecting a lot of premium. Let's go back to the markets. A few other things that are going on. Did you notice that Bitcoin is now up and away, also rallying, scratching 50,000? So today it was actually trading exactly at 50,000 for just a few minutes ago, and then pulling back. But Bitcoin seems to be ready to go above 50,000. So maybe these Bitcoin ETFs are actually showing some effect. Let me see if I can just quickly double click on this. As you know, there are Bitcoin ETFs right now. I don't know what else would be driving Bitcoin higher, but right now up 2.7%, cracking the 50,000. And this overall quite a day in the market. So happy to see of all of our positions up more than the market average. So S&P right now up 0.2%, not a whole lot, as you can see here. So I really, really hope that you're enjoying the show. I also want to apologize really quickly for, when was it? Last week. It was, I believe, on Thursday when we were doing it still live from Cancun. Suddenly the internet at the hotel went out, so the last show was cut very, very short. Sorry about this. And then on Friday, both Mark and I were traveling. Anyhow, hey, hope that you enjoyed the show. If you did, give me a like. Really appreciate it, especially since I'm doing it alone here today without Mark. If you think that this was great information that is worth sharing, there's a share button underneath. Please share it with anybody who might find this helpful. And then we'll see you again tomorrow. Have a great rest of your day. And tomorrow morning, same time, same place. Take care.